Hey guys, in this video we're going to be talking about how long can you depreciate a rental property for? How long can you depreciate a rental property for? And there's actually two, even three answers to this question. If you are working with a residential rental property, the answer to the question is 27 and a half years. You can depreciate that property every year for 27 and a half years. And I even know the reason why that number is so randomly 27.5. I've researched this, and the reason is because when they were putting this law into place, there was two congressmen that could not agree on a number. One person said 25 years, the other person said 30 years, and they met in the middle at 27 and a half years. So any type of residential rental property can be depreciated over a period of 27 and a half years. Now, if you own a commercial rental property, maybe it's a strip center or something that's more commercial, it's not necessarily residential, those properties can be depreciated over a much longer period of time. And in fact, you can depreciate those over a 39-year period of time. So 27 and a half years for a residential property and 39 years for a commercial property. Now, there's a third way to depreciate property, and that is where you depreciate 100% of the property day one or year one when you buy it. And this is a little bit more complicated. It's called cost segregation, and you're gonna essentially need to hire somebody to help you do this. But what you're able to do is depreciate 100% of the property year one. The only caveat to doing that is when you depreciate a property, even if you're doing it over 27 and a half years or 39 years, or if you do all 100% of the appreciation in the first year, the caveat is you are reducing your basis down to zero. And when you do that and you go to sell that property, assuming you do it all in year one, you reduce it down to zero. But if you do it over 27 and a half or 39 years, over that period of time, let's assume that you do it for the whole time, you will be reducing your cost basis down to zero. So if you go to sell that property, no matter what the value is when you sell it, whatever that price is, you're gonna have to pay taxes on that entire amount. So whenever you use depreciation, it's helpful right away, right now, because it is essentially a phantom expense on your taxes that offsets your income. So that's why depreciation is such a valuable resource for real estate investors, because we can essentially show expenses that we didn't have to dig into our pocket and pull out to pay. These are incentives the government gives us because we are providing housing to our fellow neighbors and Americans and citizens. And they know that whenever we're providing housing in the term of a rental property, doesn't matter if it's commercial or residential, they know that there's gonna be some wear and tear on the buildings, and that we're gonna have to continuously invest money to keep these buildings and these properties up and making them look good. So they're going to incentivize us by letting us depreciate them over time. And again, the caveat is when you use depreciation, your cost basis is gonna shrink. So without going into this too deep, let's just do a quick, super simple example. Let's say we buy a property for $100,000 and the value of the land in this scenario is $10,000. You cannot depreciate the land. You can only depreciate the building and the fixtures that are affixed to the land. So let's say we buy a property for $100,000, the land's worth $10,000. We have a $90,000 cost basis on this property at this point, right? So what we can do, or the cost basis is actually $100,000, but the amount that we can depreciate is $90,000. So what we're gonna do is we're gonna take 1/27th of that $90,000, that's what we're able to depreciate, and we're going to use that 1/27 and a half of that number, and we're gonna write that off as depreciation, which again is a phantom expense which offsets our income. But let's just assume, simple math, we're not even gonna get a calculator out, let's just assume that depreciation, 27 and a half of 90 is roughly $2,000, right? Well, what that means is that if I sell that property a year and a half later, my cost basis is no longer $100,000. Now my cost basis is $98,000. So if I sell the property for $110,000, there's not a $10,000 profit that I'm gonna have to pay my taxes or pay my capital gains on. It's actually gonna be over $12,000 because my cost basis went from 100 down to 98. Now again, this is not exact math, I'm just using this as an example, but there are tremendous advantages to using depreciation to offset the amount of taxes that you pay. But just know when you use depreciation, you are reducing your cost basis. So when you go sell that property for a profit later, it's not from what you bought it for and what you sold it for, it's actually what that new cost basis is. So what you bought it for is going to be depreciated as well, that cost basis, when you are using depreciation. But don't overthink it, guys. It's incredibly simple. The question was, how long can you depreciate a rental property for? That's the main thing, right? And the answer is either over 27 and a half years, if it is a residential type of a property, or up to 39 years if it's a commercial property, or you can use what's called cost segregation. There's actually a couple more terms for that as well that will actually let you depreciate that property right away over 1 year, or maybe you want to do it over 3 or 5 or 10. And again, you're going to need to hire a professional accountant or tax professional to help you with those accelerated ways to depreciate property. But 27 and a half for residential, 39 for commercial. That is the answer. Keep it simple. And if you guys found value in this video, make sure to hit that like button and subscribe for more videos just like this one. Thanks for watching.